Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Welcome to The Bigger Picture. I'm Dan Koh. Now, for decades, the US has been regarded as the undisputed leader in the tech realm. But today, it seems like the narrative is changing. The question is no longer if China tech will be able to catch up to the US, but when? From the inception of Chinese chatbot DeepSeek to Alibaba recently unveiling plans to develop its very own AI chip, we're diving deep into the world of tech today with Sean Teo, the sales trader at Saxo. Good morning, Sean. How are you doing today?
Good morning, Dan. Thank you so much for your time. I'm doing great. A little bit of a gloomy morning.
Oh, yes, certainly it is. But not so gloomy for China, though, because we're seeing how this ever-evolving technological age is just shaping up the AI landscape. It's no longer a question of whether China can catch up with the US tech, but when it will happen and how soon it will be. Just recently as well, Saxo published an article about why China's tech catch-up is one that shouldn't be missed. So to set the stage, Sean, can you first talk to us about the genesis of this report and why it's so important to highlight it now more than ever?
Okay, I think the main reason why it's important to highlight this is that you can see the tensions between the US and China actually starting to rise a little bit. And I'm not sure whether you and the investors have actually seen that we actually had the China's military parade, I think yesterday or the day before. And US was actually not invited to that. So, there's a little bit of a question mark for what's going to be happening from here on. But as you can see also, China recently has actually been trying to be more independent and self-sufficient.
Yeah.
Not just from the US, but also pretty much from the rest of the world. Furthermore, this has actually been boosted by the fact that US has actually started to restrict their high-performance Nvidia chips to China. So Chinese government, they know this could be an issue for them. They have actually started to step in and actually to push and incentivize companies to produce their own chips as not to rely too much on the US. And apart from that, also you can see the AI part, apart from the just the chip sector, AI in China has also actually started to catch up a little bit after the whole world was pretty much shocked by how DeepSeek actually performed against the American benchmarks.
Yeah.
So I'll say China now, they are, starting to be a force to be reckoned with. They are no longer something that, just to be brushed aside of now.
Yeah, that's right. Independence is the name of the game as we're seeing it now, like what you've rightly mentioned, DeepSeek. It certainly rocked the global tech community. And just recently, we're seeing a surge in China's tech thanks to a slew of reports coming from the likes of Alibaba's recent earnings, which reinforced how AI technology can be monetized at scale. On top of that, Meituan also debuted its very own open source AI model. Now, these releases seems to reveal Chinese growing technological prowess. It also showcases a distinctly Chinese approach to AI investment and the advancements as well. So the big question is, who's coming out on top of the tech battle between China and the US? How exactly does China's view on tech and AI development differ from the US?
So I would think the key difference between China and US, is that I think the Chinese side, they are actually a lot more open regarding their innovation and technology. A lot of their stuff are actually a lot more open source. So as you can see, these examples of these open source examples would actually be Alibaba's Qwen and DeepSeek. So actually all these technologies that they have were actually relatively open source. So compared to in what we see in the US, US generally keeps their best innovations or technology more of a secret.
Yeah.
So we can see why this is so, but then again, if you keep things a secret, that would potentially hamper innovation because lesser people can help you contribute to how the technology can improve. So Chinese government also, they are a lot more supportive via even national initiatives to actually drive these open source technology to further improve what they already have. On the flip side, US does actually encourage open source, but I'll say they aren't as pushy or at least as incentivizing as the Chinese government to actually improve these in the US. So I think how these two countries actually differ is that China is a lot more open source in how they actually do stuff, and in that aspect, I think things could actually progress for them quite a fair bit faster.
Oh, that is some great news to hear from China's standpoint. But then the question would be, will Nvidia's dominance be tested? I mean, now we're seeing a lot of these Chinese semiconductor startups like Cambricon, Moore, Threads, and Byron. They're all racing to rival Nvidia as US export controls continues to reshape the AI landscape. So my question to you is, does China's tech have what it takes to overtake the US?
I would say for now, near term, like say maybe in the next 1 or 2 years, the answer is probably no or not yet, unless we haven't seen like what China, or at least maybe China has been keeping some stuff from us. But from the looks of it, what we see in the market is probably a no or not yet in the next short term, like say maybe a couple of years. However, in the long term, I think there's a pretty good likelihood that China could actually catch up to the US in terms of their high-performing chips.
Okay.
So the thing is, China probably will take a couple of years to do like the research and development. These sort of things don't exactly happen overnight. But one thing that's actually, I would say, the wings on their back is that they have the backing of the Chinese government, plus the largest companies in China. So the question that you actually put forward, this seems to be more of a when than an if. Yeah. So just looking at examples, like Tesla, like say maybe like 5 or like 7 years ago, they started this EV movement. But as you can see, as of right now, China is pretty much catching up to this EV race.
Yeah.
And some people actually mentioned that China could already have taken the lead in this EV race in some aspects. So I would think like if the momentum continues in China's favor, this would likely happen in the future. So it's short term may not see that this catch up to Nvidia yet, but I think longer term they could start to really catch up to what they have in terms of innovation that US has.
Fantastic. That's tons of things for us to look forward to. Now then, how should investors be tapping on this position? Then how can we capture this growth, and how should we be positioning our portfolios?
Okay, so how investors can invest in the Chinese aspect is that they can actually start to look at, I would say, Chinese companies, of course. If they don't wish to actually pick like individual stocks, you can actually look at ETFs. So as you can see, a lot of actually Chinese companies are, coming out, innovate, and even create their own chips and AI technologies and steer away from the reliance on US and AI. There's, I would say, troves of like companies out there where you can actually invest for the Chinese, but the easily accessible ones would actually still be the ADRs, so you can actually invest in the US ADRs or even like the more accessible ones like Hong Kong. But however, on easier ones would actually be ETFs because investors don't want to pick like any single stocks because, these stocks can be highly volatile. Like, for example, the one of the stock that you mentioned, Capricorn, I think in a single day could be like moving in the double-digit percentages, so investors can't stomach that. They could actually look to invest in a basket through an ETF instead.
Fantastic. All right. Thanks a lot for breaking all of that down for us, Sean. Now let's zoom further into the US, where the non-farm payrolls data is expected to be released later today, and it seems to be a turning point for both the US job market and the Fed's policy path. Something about 75,000 jobs will be added, only a little more than the July's 73,000, slightly slower than the fast pace earlier this year. So what is your take of the inflation story in the US today, especially since we're expecting the CPI data? And how do you think this might shape the September interest rate trajectory for the end of this month?
Okay, so I will start off regarding the interest rate first. So I think this one will relate to how the non-farm payrolls and inflation would also affect it. So as we speak, at least yesterday, I just checked the data that investors are pretty much expecting that there's about a 97% chance that we could see a 25 basis points cut on the 17th of September, the US interest rate decision. However, this data can be moved relative to what actually happens tonight for the non-farm payrolls and the inflation data that we have next week.
Yep.
So as you mentioned, then the non-farm payrolls are expected to be at 75,000. However, this 75,000, right, and also compared to the prior months, is actually such a low number because there was a revise or revision of the numbers previously. So I would say the US government is pretty much, or the Fed is in a tricky situation. Because if we start to see the labor market continue to cool, right, then this would generally not be a good thing for them. However, we also have to start to see the inflation figures in the US. The Fed's preferred measure is the core PCE, but headline inflation is coming out next week.
Right.
Headline inflation would be, I'll say, somewhat of still a good indicator of where the US inflation is. If we do see the labor market start to cool, and on the other hand, inflation also start to pick up, the Fed will actually be in a very tricky situation. So they will need to determine whether to save the labor market or whether to keep the inflation figures in check. So I think I'll say the Fed is pretty much stuck between a rock and a hard place, and the decision that they're going to make is going to move the markets quite a fair bit going forward.
Yes, certainly a very hard beam to balance, but thank you once again so much for breaking it all down for us from the likes of China's ever-evolving technological space to what to expect when it comes to US data. Thanks for joining us this morning, Sean.
Thank you so much for your time, Danny. It's been a pleasure speaking with you.
Likewise, have a fantastic weekend. Now we've been speaking to Sean Teo, the sales trader at Saxo. Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.